All right, everyone, welcome to another edition of my Thursday Live. We've got a great one in store for you tonight. A good friend, my preferred lender, Ian Ashton from One Trust Home Loans, is going to be joining us. I actually had a different episode planned for tonight earlier in the week, but I started getting questions about mortgage and getting pre-approved and interest rates and what to predict for this year. So I thought it would be a very timely time for those of you that are considering relocating in 2025. You're probably getting your ducks in a row. You just did your taxes or you're about to do your taxes. And now is a great time to get pre-approved. And whether you're buying a house in Northern Michigan or anywhere, a lot of this information is going to translate. And I think as highly of Ian as I do of anyone, if you want to buy a house, the relationship you have with your lender is just as important as the relationship you have with your real estate agent. And although you are more than welcome to use whoever you want, if you call me and you've got a lender that's a good friend of yours or a lender that you've worked with in the past, you're more than welcome to use them. If you do not have a lender, I strongly recommend Ian because we've done tens and tens and tens of deals together. And what I like about Ian is I know that if he says something, it's the truth. If he pre-approves you and sends me a pre-approval letter, I know that that's as good as gold. A lot of banks will send you a pre-approval letter and it's not worth the paper it's written on. So I really appreciate everything Ian has done for our clients. He is as dialed in the mortgage business as anybody I know. He's going to answer all of your questions tonight. Tell us what to expect this year as far as getting mortgages and interest rates and what his predictions are for the market. So if you're watching this live, drop a comment if you have any questions. If you're watching this as a replay, again, drop some questions. Ian's going to be checking those out and he will answer. So without further ado, let's welcome Ian Ashton from One Trust Home Loans.
How's it going? Thanks for having me. Before we get started, I had something I wanted to share with our viewers here, and that is I went through my call log.
Ian, we're having a hard time hearing you.
Oh, I did the test on the microphone and everything. Can you hear me at all or no?
It looks like he's going to try to restart. But again, if you have a lender that you love, no problem with that. If you don't, I sincerely suggest talking to Ian because he will. The reason I like Ian is I feel like he's a lot like us. He's as dialed into the mortgage side of the business as we are to the selling side of the business. And when you are buying a house, not only is it important to have the right interest rate and the right fees, but also having the right lender can make a world of difference. So while Ian hops back on, drop any questions you might have about the market. We are experiencing, I don't know if it's the amount of snow we have, which if you could tell, I replaced the Christmas tree I just got a new snowboard. So I put my old snowboard in the corner because I wanted to do something with it. And I could not, let me add Ian back to the stage. It doesn't look like his camera.
Can you hear me? Now. It's showing me the levels. I'm not sure. No camera. That's so weird. I can see.
So yeah, I think that we are witnessing one of the best winters we've had in Northern Michigan in a while. The Lions are good, so we have that to look forward to this weekend. The skiing has been amazing. We've had a ton of snow. So if you like snow, you're going to love, or you would love Northern Michigan right now. So let's try to get Ian back on the stage.
Can you see me? Can you hear me? All right, I'm going to try it from a different device. I guess if I'm talking and you can't hear me, that doesn't do us any good.
Let me refresh the stream and see what happens. All right. Say something.
All right.
Now we can hear. All right.
Sorry. Oh, okay.
Right. Thank you for bearing with us. All right. Thanks, Michelle. Okay. I just had to restart. So
I was like, it's showing me the levels on my screen and I couldn't,
somebody in the chat so they could hear you. So I don't know what happened. I just restarted it and it's fine. StreamYard usually does a good job for us, but thanks for bearing with us. What I was telling everybody, Ian, is I can hear myself. Okay. That should be better. What I was telling everybody is if they have a lender that they prefer to work with, I don't mind who they use. But if they don't, they should definitely give you a rundown. So just tell us a little bit about yourself and
Yeah.
we'll start
So,
there.
I'm going to start this conversation or this episode here with you with a fun fact. I went through my call log today. Do you know how many times you and I talked on the phone today?
100.
It was actually 6, but we had it was pretty evenly spaced. So it was like we could tell we get to a certain point where we're like, oh, it's been a little while. I better check
Yeah,
in.
we got to talk.
Um, But so I'm Ian Ashton. I'm a mortgage loan officer. I currently live in Traverse City. I grew up in Southeast Michigan, but I've lived in Northern Michigan for about going on 14 years. Moved here. My wife is from Traverse City, so when we had the opportunity to move here through my employer at the time, a big bank, it it was like a dream come true. My wife was pregnant with our son, all of that. So it was just the timing was right, and it was cool. I think one of the stories I love to share with customers and friends and stuff, the people that know both of us, is when I worked for my first employer was Chase. When I worked for Chase, you'd say, "I love you, man, but I can't trust Chase with my clients." And I respected that. And I switched to another big bank, and you said the same thing. And then, finally, I opened up what became One Trust, but it was Caliber Home Loans at the time. And you said, okay, this is a new thing. It's not a big bank. It's not a brand that we've already gotten burned by a bunch of times. So we'll give you a try. And that was almost 9 years ago, and kind of the rest is history. So I thank you for that opportunity. And,
No problem.
I commend you. Your conviction and your commitment to your customers is second to none. So, being able to tell somebody that, a college friend, very close friend, I like you as a person, but I just don't trust your company's business model. I mean, that's huge, right? So
Absolutely.
I think that speaks volumes.
Let's just get started. What should somebody, your business is volatile, more volatile than ours because, one thing that I think the benefit we have is when rates are high, as they've been for a long, long time, there's a lot we can do as real estate agents to generate business, but not so much as a lender. Where have we come from? Where have we been market wise and where are we going? Where can you tell everybody, what you've seen in the last 6 months and what you predict for the next 6 months?
Yeah. So the last 6 months or even the last 12 months, when you look at it on paper, it looks a lot like 2023 did. So the shifts aren't necessarily in the statistics, right? Like if we look at the different MLSs, yours and Emmett and Water Wonderland and Aspire down here, the transaction counts are very similar, right? The average sale price has gone up pretty consistently, which is great for people that bought a year ago. It continues to get tougher for those that have held out or are waiting. So, kind of the trend that we've seen has slowly started to shift from it being an aggressive seller's market, meaning you list your house as a seller and you're getting a ton of offers. So as a lender, that's really tough because you've got buyers, great, wonderfully qualified buyers, but if you're borrowing money from a mortgage company, that's not the same as cash to a lot of sellers. So, right. I would say in the last 12 months for sure, but especially in the last 6 months, there's been a definite shift away from the cash buyer dominance. And I don't know that I'd say I think it's a buyer's market. I think it's a balanced market. I think buyers are starting to get a nice taste of extra inventory. So it's not such limited options, and I don't want to say there's no pressure, but it's not like the sprint. Right. Did you see this house? Yeah. Okay. You better write an offer because somebody's going to scoop it up. So the market is starting to return, I think, a lot more to a normal sort of clip.
I think it's normal. I agree with you, Ian. I think it's normal. I think it was such a seller's market that it might feel like a buyer's market just because it's definitely shifted away from that. And it is nice. Look, it's nice, a year or two ago, if a buyer saw a house that they liked in Petoskey, Traverse City, they had and I'm not being funny, but minutes to think about it, or
literally
maybe an hour. And now it's nice to go ahead. Sorry.
Oh, I was gonna say we would joke. It'd be like, how quickly can you get this pre-approval letter over? Because literally the sellers have a pen about to sign the offer. They're going to accept.
I think it actually is, a couple of things. One, I think it benefits people like you and I because look, and I'm just putting this out there. Every month, our MLS sends a sheet of the new realtors, the realtors that have went from one company to another company, or realtors that are dropped. And the number of realtors that have dropped every month is bigger and bigger. And I think, and I don't want to see anybody, I don't want to see a lender, I don't want to see a realtor be unsuccessful. But I do think that is an indication that it is harder than it once was. And buyers and sellers alike are starting to be more picky with who they use. Um, and I before we got cut off, I don't know if you heard or not, I said one of the reasons I like using you is you and I have worked together for so long that, it's very small here. If, one of the other productive realtors in Northern Michigan, I write an offer and they say, oh, I just say they're working with Ian. I don't, it's like a first name thing. And I think that's something that we're benefit from. I don't know. I've never been in a bigger market. Like I've never been in a metropolitan market, Detroit or Grand Rapids or whatever. I don't know if that's the same thing there, but that's one thing I like about Northern Michigan is there's just a level of trust that, there's a handful of lenders that are great. And you're good. You're not the only one. And I'm not the only good realtor. There's a handful of, home inspectors that are good. There's a handful of appraisers that are good. So, for you to be in that, at that table really gives the buyers an advantage, which is one of the reasons we use you.
Yeah. And the reality is to be a great realtor, to be a great lender, it doesn't take a lot, right? Like you just have to show up and do what you say you're going to do, which is, it's sad that that's the bar that our industry has set. But, when I work with a customer, I kind of have a spiel that I tell everybody, and it's basically, I'm very selective on who I work with. I'm incredibly fortunate that I've been able to build a really nice team of loan officers across Northern Michigan. So I have many primary focuses within my company, and one of them is production. With you and a very few select realtors that I choose to work with. Right. And the rest, I manage the team. I write content for our company that, I do a lot of different things, but for me, it's always about finding the right fit. Like if I want to make sure that I get along with the customer and the customer gets along with me, and I want to build that trust, because ultimately, if you go through the purchase of a home and you're not trusting the person on the other side of the table, or in many cases, we don't even get to meet these people until the very end, right. So that takes a tremendous amount of trust, because number one, you're spending hundreds of thousands of dollars, and I'm asking you for volumes of information, personal information, right. Financial information. So, it's really important to me to, I guess, live up to that expectation. So, the adage, under promise, over deliver, is Absolutely. Like, you can't make that point enough, I think. And it's, I'm honored that you think that highly of me. It's
no, you've earned it. I don't just think that because I decided, because I think you're good looking, and that's what I want the world.
Is it because I am a cat mom?
Yeah. Did you steal that from Candace? Did you steal that from Candace? What are you drinking, by the way?
I've got some tea, actually.
Oh, I'm drinking grape water. No, not grape, blackberry lemonade.
I've recently discovered Waterloo. I'm a big seltzer, like a soda water.
High noons.
Yeah. High noons.
I don't know. This is really off topic, but so Ian and I have a great relationship. We're going to keep it serious tonight. I knew if Candace was watching, I knew she was going to want that mug. So
I'll step it up.
So we're going to put Candace on the screen. Maybe one day she'll have her maiden name. So Candace is my assistant forever. Candace, myself, Ian, we've helped so many people together that we are as dialed in as it gets. So shout out to Candace. She's a huge part of the team.
Very much so. And on my
she's probably more important than both of us, in all honesty, because
when we run a buyer through our process, there's kind of the standard stuff that you get to tell them what to expect, and when it's a deal you and I are working on, it's fun, because I'll say, like, here's how it generally goes. Gino is the beauty of their operation. I'm the beauty of my side of the transaction. Candace is the brains. She's going to get all the paperwork done, figure all that stuff out. And on my end, it's Mandy, my loan processor. I get to look good and take all the credit and shake the babies and kiss the hands. But ultimately, the people behind the scenes pulling the strings are beyond fantastic at.
No, and look, I don't want to. This is not a commercial for us. I mean, that's kind of it is. It's more informational. But I think, especially in this market, that Farmers Insurance or whatever the insurance company is, they can cover anything because they've seen everything. That's probably if I could just say that and turn this live off, because that's how I think you and I are. And then also, the market it does move fast, and we want to give a good experience, because I think, buyers, especially in the price ranges that we're dealing with now, are just used to having good experiences at their car dealership, at the clothing store. And Candace is definitely, I don't know how I could sell real estate without Candace. She makes the client experience so much better. And I think it's worth, the amount of her salary to guarantee that. Look, I charge the same. I don't know if I'm allowed to say this anymore. I don't want to get shut down, but first, I'm going to say real estate fees are negotiable, but most realtors within a range charge about the same. So you might get somebody that's brand new that is a one-man band, but then you get somebody that has a whole group around them like I do, and that really creates a better experience. So I'm super grateful for Candace, and I'm happy she's watching.
I'm stealing this mug from my wife and giving it to Candace too.
So, all right, Michelle Smart, who's often on our lives, has a question for you. So I'm going to put it on here and read it. Farian, what tips do you have for a young couple? This is going to be a good question.
Yeah.
What tips do you have for a young couple to get approved for a home loan, especially in the northern Michigan market? I like to share this info with my daughter and son-in-law. This is a great question, Michelle.
So I would say, if I polled my team and asked them, what's the most common question that you get? It's this, right? There's so much misinformation and people get so intimidated by the premise of like, I want to buy a house, but I have to get to whatever. They set these barriers or these milestones in their head. But the reality of it is, the first thing you should do is talk to a lender. And I hope it's me. I'd love to help anybody that's out there. But the reality is, if you talk to a lender, an experienced lender, I'm not talking like a call center or something like that. You need to find a lender that's helped a family friend or somebody or whatever, but find a lender that's in the market that you're looking at buying in. Tell them your situation and tell them what you're looking to do. And that lender should be able to sit down and say, all right, let's do a couple of things. We can look at doing a pre-approval, which is really the first step of the mortgage process. But before we do the pre-approval, let's get kind of all of the questions out of the way and set the right expectations. So that way, if you're coming in and you're a first-time home buyer and you're saying, and this conversation happens pretty regularly, we'll have a person that comes in and says, yep, I want to move into Petoskey, or I want to move into the Traverse City area. And I want my house payment to be $1,000 a month. And I want to have a view of the water, and I want to have this, and unfortunately for you, that's your job, right? You have to set that expectation and show them, okay, this is what this amount of money gets you. But for me, my job is to say, okay, well, if your budget is $1,000 and that's what you're comfortable paying, I don't want you to go over that. I want you to feel comfortable with what we qualify you for. But let's go through and make sure that we're using that $1,000 in the most effective way possible. So from a qualification standpoint, we'll look at stuff like, what are your monthly debts and what is your income and what does your credit look like and that kind of thing. But really, it's a deep dive into your whole picture financially, because sometimes I'll look at somebody's credit report, or I'll look at, a whole picture for particularly young couples or young families just starting out. And they'll say, okay, we've got this amount of money saved up that we're going to put towards our new home purchase. And I'll look and I'll say, well, it's great. You've saved up, however much money. Instead of putting all of that towards this house, maybe we put some of that and pay off this credit card, because your credit card's 22% interest, but your mortgage is 6% or, whatever the rate may be. And, a lot of times a lender is so focused on customer wants pre-approval, I'm going to shoot it out as quick as I can. Right? No. So in instances where you need it quick, we can certainly do that, but I would love to help you reach your goals. I also want to make sure I understand what your goals are to help you get there. And if your goal isn't aligned with what your reality is, right, it's also on us to set that or reset that expectation. So I would say first step, absolutely talk with an experienced lender. And from there, I'll tell people really often, if you think my time horizon for buying a house is 6 to 12 months, for whatever reason, that's what everybody says. It doesn't matter what month of the year it is. Oh yeah, we're going to buy a house in 6 to 12 months. Cool. You should absolutely do a pre-approval now. If I'm not buying for a year, why would I get pre-approved now? Why am I going to have you look at my credit and do all of that stuff? And the simple reason is, if nobody has gone through the pre-approval process and asked you the questions and calculated your income and looked at your credit, there could be a landmine buried in there that you don't even know about, right? So it's, again, I hate to sound like I'm coming, or coming at the younger or first-time buyers, but if you haven't if nobody's looked at your credit, you don't know if your identity's been stolen for that matter.
Right.
You know, like there could be stuff on there that you have no idea about. And we've uncovered stuff like that. So it's starting sooner. You're never going to look back and be like, man, I wish I wouldn't have talked to that lender for a half an hour. Like it's an easy time investment to make, and it doesn't cost any money to just get a little bit of a plan put together so you know how to proceed.
That's good advice.
Thank you.
Kitten1234, real quick. I think this is probably one of your.
That's my daughter. That's,
there we go.
Kate.
Kate, thanks for watching. The Traverse City Guide. I'm actually really they commented on one of my videos a while back, and they've got a really good YouTube channel. So if you want to learn more about Traverse City, make sure you check out the Traverse City Guide. Maybe we'll have them on a live. But their comment was Zillow has 14 listings for TC. I have the search parameters wide open. Question: is the market in TC really that sparse right now? It being winner to realtor. So no, I think a common misconception is we have a large database of off-market properties, and that's just simply not the case. We do have, look, every realtor has a handful of people that would sell that just don't want to publicly put their house on the market. I was going to have, if Candace is still watching, Candace, can you check the Traverse City MLS and see how many houses are available?
The other important thing, and I was actually just going to there's definitely, I guess it depends on what you consider Traverse City. If we're talking Traverse City proper, which is the city of Traverse City, which is a very small area, downtown. Mm-hmm. I believe that there could be 14 houses listed. If you're talking, like I live in Acme, which is the east side of Traverse City, but my address is still Traverse City. Right. So when you're looking at, to say Traverse City, there's probably a couple hundred Traverse City addresses on the MLS. But yeah, I think that, I guess you're the realtor, and
because when Traverse City guy asked that, I had the Candace's check before. See, look, this is why I have Candace, because checking stuff with YouTube. I looked at Petoskey, and right now there are like over 50 listings in Petoskey. I guess some are rentals. That seems like a low number. But to answer the question, the more general, the listings are down. It's starting to pick up, and the reason is a lot of listings are hitting the market and not selling as quickly. And we're seeing that in Petoskey right now, and Traverse City, and Gaylord, all the other areas, Charlotte, Boyne City. The market, one of the hardest, there's a lot of hard aspects to what I do every day and what Ian does every day. And personally, maybe I can ask Ian what the hardest part of his job is right now. On the seller side, so I have two overwhelming jobs. I help buyers, I help sellers. On the seller side right now, it's almost impossible to price houses, because typically the way you price a house is you go back and look at comps, and in a market, and I don't want to say we're in a declining market, but in a market that's different than the market we're coming out of, it's hard because you'll have all the data in front of you that says this house should be worth, $700,000, and you'll put it on the market and it will take a little bit to sell. I do think we're going to see and Ian, if you can weigh in on this, I personally think we're going to see a lot of inventory this year. I think there's going to be a little bit of a backlog because houses, aren't coming on and selling automatically. So they're coming on, lagging. Another one comes on. So suddenly you have a little bit of an inventory. So what do you think is, obviously this isn't really your world, but what do you think is going to happen with inventory this year?
I agree 1,000%. So I'll use a couple of like real world examples. So right now in my pipeline, I've got, I think, at least 2 customers where the properties that they're under contract on, our buyers were the only activity that those sellers had seen in some time, and the listings were well over 30 days old. Actually, one of them, not the one that I'm working on with you, but a different one I'm working on in Traverse City area, was on the market for like a lot, like 100 days something, which is unheard of, right? And especially it's like under 400,000. So I think that we're definitely starting to see properties take a little bit longer, especially the more unique properties, a little bit longer to find the right buyers. And I think that, the affordability conversation is real. Like if rates are 6%, you can afford X, and if rates are 7%, you can afford Y. Math is math.
Fair to say, Ian, people aren't necessarily buying. It's almost, this is something I think we're talking about. When people come to you, they're not buying a $600,000 house. They're buying whatever pick a payment, $3,000, $2,500. They're buying whatever that payment will get them. If they come to you and they can afford a $2,500 payment, if that computes on the other end of a $600,000 house or $500. So interest rates definitely have a major impact on housing prices.
Yeah, and what we'll see is there's not a direct relation. I mean, there's a direct relation to increasing interest rate and payment going up, obviously. But if rates go from 5 to 6, the impact to the monthly payment is less than if rates go from 6 to 7, right? So the higher rates get, it's an exponential factor on the monthly payment side. And that was a big shift that we had to go through, especially as rates were rapidly increasing, because you would qualify a customer and say like, okay, I've got you qualified for a purchase price of $400,000.
Right.
Because when ultimately the realtors need a pre-approval letter that says this person's purchase price limit is whatever. The reality of how a pre-approval works is we don't necessarily care what the purchase price is. We care what your debt to income ratio is, because you're not paying us back in one payment. You're paying us back in 360 payments. And it's my job as a lender, and my underwriter's job as underwriters to make sure that you can make all 360 of those payments. So we want to make sure your job is stable. And if you've got variable income, we want to make sure you've got some savings. There's so many different variables. So yeah, I would say, to answer the question you haven't asked, but you told me about what's the hardest part of what we do, because it does relate directly to this topic. It's absolutely qualifying buyers in such a volatile market. And the good news for us now is that, knock on wood, hold your breath, whatever, cross your fingers, we're starting to see rates stabilize. They're not stabilizing where we'd like them, but I'm a firm believer in stability sells more houses. Stability gives more confidence to the buyer than low rates. If I have 7% today, 6% tomorrow, 3% Tuesday, and back to 7% on Wednesday, that drives everyone out of the market. If it's just 7% all the time, yeah, 7% is kind of a bummer, but it's predictable. And we know if your budget is $3,000 a month, that yields this amount of a purchase price. So I just think the volatility has been really tough, and we're definitely starting to see the market stable off. It's still volatile, but the swings aren't nearly as big.
That'll be something interesting to watch. We do have some comments coming in. So this is the first time we've had an actual Q&A where I think people are going to really have a lot of questions for you. So
nice.
Adam Witt, one of our great listeners, Evening Gino, our loan qualifications. This is a good question too. Thanks, guys. You're asking, a couple of questions we've got so far. These are great. This is exactly why I wanted to do this, because these are the questions you should be asking. It says, Evening Gino, Ian, are loan qualifications different for traditional mortgages versus construction loans? Do you do construction loans, Ian? So take the stage.
Yeah. So they're very similar, but there are certain nuances to the construction product that are a little bit more involved. So I don't want to say a construction loan is harder to qualify for. It's just a little bit more rigorous. And the reason is because it's a really long sales cycle, right? If I'm qualifying you for a mortgage on an existing home, we're going to close in 30 days or less,
right?
Unless there's some other thing like the sellers don't want to close that fast, or whatever. Generally speaking, it's going to be a month and we're done. A construction loan, you're looking at 12 to 18 months, and a lot can change over that period of time. So I guess to answer the second part of the question, absolutely, we do single close construction, which is where you lock in the terms for your loan on day 0, and the house gets built, and in 12 months, 18 months, when it's done, you already know your mortgage payment, everything is already set and done. We do the appraisal and that's it. And we also do what's called a 2-time construction loan. So a 2-time construction loan is essentially, it's like using a line of credit to build the house, where the interest rate and the interest you pay, the interest rate is based on the Federal Reserve prime rate, and the interest you pay is only based on how much you borrow. So it gives you a lot more flexibility, because you're paying potentially less as you're building the house. It steps up. The downside to the 2-time close is that you're subject to whatever the terms are at the end of the loan. So right now, 2-time close construction is the way to go, because again, knock on wood, the idea is that, in 6, 12, 18 months, rates should be trending in the direction that we want, as opposed to going up. A year ago or 2 years ago, I wouldn't touch a 2-time close construction, because if I qualify you at 6% and rates just went from 4 to 6, and if they do that again, that puts you in a lot higher payment situation, that kind of thing. So the short answer is, construction, not necessarily harder to qualify for. It's just a little bit more rigorous. And, as a lender, one of the things I often, a lot of people reach out to us and say, yeah, I really want to build a house. Right. It's my first house, and I want to build it because I want it to be perfect and exactly what I want. And that's awesome if you have the ability. And there's products out there that allow you to build a house without a ton of money out of pocket and stuff. I caution people against that. Not just because it's easier to do a normal loan, but a lot of times, if it's your first house, you don't really know what you want in that home until you've lived in it. So there's so many variables, there's so many things going on with the mortgage process, but by and large, I think the construction process is probably going to be pretty similar to the normal process.
So Mike Nelson, apparently we have a lot of questions about this. Actually, again, this is the reason I do this, because I need to do more content on. So the reason I haven't, my brokerage, so we're right downtown Petoskey, great location. We're on the first floor. There's a really, really good builder above us. And I just spoke with him. He's going to come on and do some content with us. But the reason I haven't gone down the new construction path is, guys, good, bad, right, or wrong, it has, especially, I don't know if it's like this in Traverse City as much, in Petoskey, it has been incredibly, like, cost prohibitively expensive.
Yes.
So this is definitely something we need to start talking about more, because it's just something that keeps coming up. And I do think with limited inventory, and look, it's expensive, but it's not, you can certainly build a house here. You're not going to do it for $300,000 or $400,000, but if you just know what you're getting into, I'm going to make a video coming up pretty quick about this, because this is just something. So Mike Nelson wants to know, do you work with new construction loans for custom homes? Sounds like you do, Ian. Is there any advice? What's some advice you would give somebody, wants to build a custom home? Where do they start?
Again, just like if you're going to buy any other house, you got to talk to a lender with a custom home, especially, right? I guess to kind of break down the construction product. There's loan officers, and in fact, like, I personally, my company is very invested in construction. There's not direct statistics, because not all mortgage companies are publicly traded. The information's not out there, but by and large, we're at least top 5 largest non-bank construction lenders in the country. We have from massive joint ventures with big builders all the way down to, partnerships with the guy that builds 2 houses that are, a year for millions and millions of dollars. So the product is such a wide range of options that we actually have dedicated loan officers that's all they do, because jack of all trades, master of none is not how I run my business. So from a construction standpoint, I'm your point guy. I'm the contact, but I'm actually relying on my back office to do the draw stuff and figure out, all of that kind of stuff. So I would say, especially if you're considering a custom home, if you're in the position to build something exactly how you want it from your plans, that kind of thing, usually I would say the qualification is secondary, right? Like, you obviously are still going to have to qualify, but if you've gotten yourself to a position where that's what you're thinking about doing, chances are you're probably going to be able to qualify. Right. It's really important to start talking to builders, because there's such a wide range in the cost of construction. You could talk to a tier 1 A+ builder and they might say it's $500 a foot. And you could talk to a tier 1 A+ builder and they might tell you it's $800 a foot,
right?
Or $200. Well, you're probably not going to get anybody to say $200. But, so there's such a wide range in cost to construct that I think it's the first step in that process is absolutely to dial in the direction you want to go with your builder, because that can make all of the difference in the world on what the end loan you're going to end up going into is, because there's different loan limits for different products, that kind of thing.
Since we've had a couple of people ask about this, the question I have is, what's first, the chicken or the egg, in the sense of, do you talk to the builder or find a builder or talk to a couple of builders? So at least because I think, it's great to talk. I think when you're going to buy an already existing house, I think it makes sense to talk to the lender first, because, you can go on Zillow and see what a house costs. Yeah. You can't really go on Zillow for the most part and see what a new construction costs. So would you recommend a buyer talk to a couple of local builders to just get an idea? Because look, I had somebody, it was heartbreaking, come into the office this summer who wanted to build a new construction home, and they had like a $500,000 budget, which is a really big budget. However, it's just not quite with the cost of building that just doesn't cover it. So would you recommend they talk to a builder before they come talk to you?
1,000,000%. And like my personal situation, just to, to kind of dive in on that, a few years ago, my wife and I bought what we were like, this is the perfect piece of land. We love it. We want to build our forever home here. And you helped us get that. And it was awesome. We loved it. We talked to some builders. I think we interviewed 4 different builders, selected the builder we wanted, and we were, well into saving the money that we needed. I'm an all-in kind of a person. So for me, I have to set guardrails, right? So I'm like, all right, we are not sticking a shovel in the ground until I have 10% of the cost to build this house, which is the builder's deposit, until I have that in my savings account. So I can write them a check, and that's what we're doing it. So, we were getting real close to being able to do that. And we kind of stepped back for a minute and we looked and we're like, okay, wait a minute. We're so far into this. We bought the land, we drew the house, we've talked to the builder, but is this whole plan what we really want?
Right.
And had we not talked to the builder, we would have never made that decision. And not that the builder talked us out of it, but we just kind of looked at exactly what we were doing. And we're like, we let this thing, it started out as a snowball and now it's, massive. Like, what are we doing? And taking that step back, because we had all of that information, it was just like, you know what? The cost of doing what we want to do doesn't add to the quality of life that we want to have. So like, why are we going to do this? So I think talking to the builder and finding the one, because, same thing. I don't want to work with a builder that will do what I want for the amount I want to spend and then get a house that's not how I want it. Right. So it's just like picking a lender in a realtor. You got to find somebody you trust. You know it when you feel it. It's
yeah, for sure.
Dude, why is that Apple Watch is humongous? Never seen one like that.
The Ultra. It's for real athletes, which I'm not, but it's really good for rock climbing, which is something I've never done.
Oh,
Michelle says I haven't seen a lot of listings on Zillow, et cetera. Yeah, the best resource is, look, come to our website, go to Zillow is pretty good. Zillow gives you a pretty good idea what's out there. If you want to, obviously Michelle, reach out to us. If you're not already in our database, we can make sure you get all the newest listings for the areas you're looking in.
Just a quick plug on that too. I've actually had customers that we work with tell me that they'll sign up through your IDX, through your system, or you'll set up the search alerts, and it leads Zillow like a half a day or a day.
Oh, does it? Wow, I didn't know that. Oh,
yeah, they're like, oh yeah, I got this one from Gino, and it just popped up in my Zillow feed or whatever. It's that's kind of cool.
Absolutely. Mike says thanks so much for the thorough answer. We have a lot of our plans. I'll reach out to his team. Hey, there you go. We like to hear that, Mike. So
love it. We'd love to help. I guess full disclosure too. Like, I am the lowest pressure person in the universe. I tell everybody, if I love to hear my own voice, as you guys are experiencing right now. If I'm talking to a group of realtors or a group of customers or whatever, the first thing I always say is, I'm going to tell you a lot of information. And if you're going through the process and you're struggling, or your lender's struggling to get something done, even though I'm not doing the loan, I don't care. Call me. If I know the answer, I'm going to tell you how to get there. And if your lender can do it, great. It gets you into the house that you want. And if you can, I'd be happy to help.
It all works out. And the reason you and I've talked about this, the second you put yourself out there on, making content, you're going to get a lot of people. Like, I've had people reach out through these videos to ask me questions that have nothing to do with Northern Michigan real estate. I actually had somebody who had a house, I had to be careful, had a house listed at Sutton's Bay that they didn't want to cancel it, obviously, which was great. They didn't want to fire the broker, but they just wanted advice on how to sell their house, and I helped them. So yeah, I think one of the reasons we work well together is we come from a place of contribution, which is why at 7:30, you're going on vacation tomorrow, why at 7:37 at night on a Thursday, we're talking, because this is meant to give as much free advice. I love this community that I'm building with my YouTube. And I want the people who are part of this community to, when the time comes, whether it's tomorrow or 20 years from now, when they're ready to buy a house, whether it's in Northern Michigan or anywhere, that they're a little bit more educated because they took the time to listen to what we had to say. So
and that's kind of how I live my life with everything, right? Like, if I'm really into cars, and I live two lives.
I'm surprised it took us this long for you to say that.
Yeah, right. I'm a mortgage guy, but I'm also a super big car guy.
And you have a car. You should plug your car YouTube. There's a couple people that were the reason I got onto YouTube. Ian has had a YouTube channel for a very long time. It has nothing to do with mortgages. Do you want to shout out your YouTube channel?
So my YouTube channel is Dr. Ian Ashton, and it's almost exclusively car content from like big national car shows that I go to, some racing stuff that I do, and then a fair bit of like family type content. So I'm big into family stuff. So my daughter Kate, who was just commenting a few minutes ago, she and I hit tons of car events and stuff. My son Rob and I, we do all sorts of stuff. So yeah, my channel is just more my life. I started it. I always joke and say, like, I just have a terrible memory. So if I make YouTube videos, at least then I can go back and see, like, oh yeah, that was pretty cool. But what I was going to kind of getting at is, I love cars, but I don't know everything about cars. There's a lot of stuff I don't know, and I've got my resources for car stuff. Hey, Joe, what the heck can you fix this for me?
Right.
So it's kind of the same idea, right? Like, I think that so often our industry gets, maybe, I don't know if bad rap's the right word, but it feels so salesy, and that's just simply not how I built my business. Not how you built your business. Like, I love to do deals and help people and make money.
Sure.
But ultimately, like, I'm far more successful when I'm being helpful to people than when I'm really trying to push and pitch something.
No, and that's great. What would you say if somebody were to ask you what the rest of, and if that someone is me, because I'm curious too, what do you think the rest of this year is going to look like? Because we've experienced, you and I talk, daily about this. The holiday season here is always a little bit slower. It felt, and I'll tell you guys because we're all friends. I have a test I do right now. If I talk to somebody in the industry, I like to. This is it's like an integrity test. I ask them how it's going, like how business is, and the way they answer that is. Tells me with the level of integrity. Because if somebody in the industry asks me, "Hey, how's it going?" I'm going to say it's been tough because this last few months. Now we're coming out of it, and I think it's going to be a good year. But the holiday season was a lot tougher this year than it's been in the past.
Oh yeah.
So what do you think? Are you seeing are the storm clouds parting? What is the rest of this year going to be like?
Yeah, absolutely. And we were really getting, I would say mid-year 2024, we were getting to a point where people weren't myopically focused on interest rate, right? It took us nearly 2 years to get to the point where people just kind of accepted the market was what it was. Do I wish rates were 3% because it makes everything way more affordable and business is great? Sure. That's probably never going to happen again, right? Like the real reason
let's not forget, it took a global pandemic for that to happen. So let's hope that doesn't happen again.
Like I said, I mentioned I write a lot of content. I write twice a day a newsletter for my whole company. 1,000 people or something read this nonsense that I write, and so I'm all over the market. I watch this stuff nonstop. He does. He does.
Yeah.
It's like entirely mortgage industry content relating to mortgage interest rates that I write. So, what I tell people all the time, and I mentioned it earlier, is the volatility is what hurts. It's not, the rates being low, the rates being high. It's that volatility. But the reality, you see people are like, not a political statement. Trump's coming back. Rates are going to go back to 2%. No. In fact, for the majority of Trump's presidency until the pandemic, rates were actually trending up. They certainly weren't anywhere near where they are now, but he didn't drive rates down, right? He held rates. The president doesn't do anything with interest rates. The president sets the tone for the country. Federal Reserve sets the tone for the economy. There's a lot of influencers, but I always think it's funny. You see Fannie Mae, Freddie Mac, National Association of Realtors, Mortgage Bankers Association. They all put out their forecasts, and you can look up and say, okay, MBA says rates are going to be 6.5 by the end of the year. And every quarter, they're going to get a little bit better or whatever they might say. If you were to go back and audit all of the forecasts over the last 5 years, I would be shocked if you averaged them. If the average of all of the forecasts, let alone just picking out any of them, none of them are even close to accurate, right? Because nobody knows. And that's kind of the tip I give people is if somebody tells you, don't lock today because rates are going to go down, run far and fast. Nobody knows what rates are going to do. We know what they should do, but perfect example we're living in right now. The Fed has cut rates 100 basis points in their last few meetings, and mortgage interest rates have 100 basis points is like 1%. So they cut rates basically 1% on short-term lending rates. Conventional wisdom tells us mortgage rates should have gotten better. They did the opposite. Mortgage interest rates got nearly a full percent higher. So
why is that?
There's a lot of reasons, and different topic for a different day.
Next time, part 2.
Yeah, I would say the short answer is there's so much uncertainty in the world, and there's so much government spending and money printing that this inflation, whatever you want to call it, it's a tough nut to crack. So I think that the market, the traders, hedge funds are not stupid.
No.
So they can see what the Fed is saying and what the president might be saying and what the politicians are saying, but they look at the data and they say, no, we're not buying it. And I think that that's simply where we're at. I think since the election, especially, I think the market's just kind of been in a holding pattern because love him or hate him, Trump's a wild card, right?
Yep.
We know what he says he's going to do. And a lot of it sounds like it could be great for our industry. When the rubber meets the road, how much is he going to be able to do? And how much of that is going to have the impact that we think it's going to have? So I would say my overall temperature for 2025 is I think it's going to be probably pretty similar to 2024, but heading in the opposite or in the right direction, right? So I think that we'll see a modest improvement in rates over time. I think we're going to still see continued volatility. And I think that volatility is going to open up opportunities for people in the short term, where if you're able to execute quickly, you can get fantastic deals on stuff, whether it's purchase of a home at a great price or locking an interest rate that's really low. I think there's going to be opportunities for a lot of people to make some really good moves.
Do you think that the market just we just need time to pass to absorb that interest rates, 6.5 and above are just the norm?
Yes. Yeah. Like we said, like it took billions of dollars of government money just force fed into the economy during the pandemic to drive rates to where they were. So absent something similar, in fact, I was on a call earlier today with a Freddie Mac economist. It wasn't a one-on-one call; it was like a webinar type call, but with a Freddie Mac economist, and they said something very similar, which is like the absent some massive calamity,
right?
Which like the pandemic was, from a business standpoint, was great for our business, right? I wouldn't repeat that. I wouldn't go back in time and do it again. Take all of the dollars out of my bank account. Like, no, I don't want to go through that. So I'm certainly not saying I would ever wish for that. It's absent some massive government intervention or something, the market's not going to naturally get there to those low rates. So I think to your point,
it's just not going to. What do you? I've got two questions I want to ask. What is the perfect interest rate? What interest rate, in your opinion, is the perfect interest rate to create the most balanced market? What's the equilibrium for interest rates?
That's a great question. So I spend a lot of time thinking about this, and it's a moving target. And I'm a nerd, right? So like I'll watch the Federal Reserve meetings. Jerome Powell does his press conference after the FOMC meetings and stuff, and you watch him and you're like, okay, he said when instead of if. Everybody reads like the smallest nuances of it, and that kind of stuff. I just think it's such a deep. Repeat the question a different way, and I'll answer it a different way. I'm trying to get to my thoughts, but they're just not coming together.
It's what's
the perfect interest rate?
What interest rate percentage?
Yeah.
I think the market.
I think
the market is too. Adam says 4.5, 5. Adam, that sounds awfully low to me, but
I think mid
probably too low, Adam. I think you're reaching for the stars. I think that's too low.
So I'll say mid 5s, and this is why. I'm not saying I think that we're going to get there overnight or anything like that, but if I look at just mathematically, I can go through my team over the last 9 years. We've closed a couple thousand loans, so I have a pretty large sample size of data that I can pull from in our market, which is good.
Right.
So if I look at those loans, I've broken it out. I built spreadsheets, and I can see I've got percentages of customers in different buckets. So there's a vast majority, we all know, of customers that have rates below 3%. So those customers are pretty well discouraged from selling that house and moving into another one because there's a massive step up to sell that house if you lose that 3%.
100%.
There's a pretty good size, chunk of customers that are between 3 and 4. Now, if you're going from between 3 and 4. If you're going from 3.5 or 4% to 5.5%, gaining a 1.5, it's not fun. It's definitely better than going from 2.5 to 5.5, right? So it's better than 3.5 or 3 points jump. So I just think that as rates come down, we certainly will see more buyers enter the market, which will potentially cause more house price increases or cause house prices to increase. I think that the other side of it is, as rates come down, you will slowly see more sellers become enticed to sell, because as we reach that number where, my current interest rate is fill in the blank, it's only fill in the blank away from the current interest rate. It just bridges that gap a little bit more. And, high 6s, 7s, it's tough to double your interest rate.
Adam brought up a good point. He says he has a 2.4 right now, and he said it makes me feel stuck.
Yes.
This is not
literally mine's 2 and 3.
Are those? What was you in this? I'm genuinely asking. Do those people, do they keep it as a rental? Do they? How do you help somebody that's in a, I guess this is probably more of a philosophical question than a math question. what would you tell? And we have somebody right now. This is a great. Adam's a great
Yeah.
example. What would you tell Adam what he should do if he feels stuck?
My entire mindset, and maybe it's different, right? Like I'm super fortunate. Like I said, I've got a great team behind me and I've had plenty of success in my life. I think for me, in the decision that we had to make, because like I had said, I think I'm locked in at 2 3/8 on a fixed rate loan on the house I'm sitting in right now.
Yep.
And I was looking at building a house and totally fine with, whatever, 6% or whatever the rate was going to be when we were building it. So I take that question much deeper and I say, it's way less about the number on the piece of paper, right? The sad reality is most of us are always going to have some form of debt. If it's a mortgage or, a car loan, whatever. There's a sect of people that are able to just pay cash for everything. This doesn't really apply to them. But if you're always going to have that debt, you might as well make it work for you. So if I'm in a house at 2.3%, but that house doesn't work for me, then the opportunity cost of me keeping that low rate is that I'm unhappy because I have this house. It just doesn't fit my needs, or it's in the wrong area, or it's not big enough, whatever it might be. So I think the mindset shift for the buyer has to be the interest rate is important. The amount I'm paying is important, but is that difference in expense, that savings I'm experiencing, enough to offset the complications that it's, if it's, I want to move because I want to move, right. That's a tough one, right? Like maybe that's not the right financial decision to make just yet. But I think, truth told, like we've seen plenty of people with low rate mortgages, some of them because they want to or they need to. Some people are moving out of area. There's one of the conversations we've had so many times is our industry, as volatile as it is kind of insulated too. There's always going to be people that have to buy, and there's always going to be people that have to sell. So, you hate to put it in terms like that, but ultimately, like I think it just boils down to what does it take to reach whatever your goal might be? And like you said, pretty philosophical question or deep question, but that's how I always look at it. So another important thing as I'm rambling on, if you're at 2 3/8 or whatever, 2.5% on 400,000, and you started at 400,000, you paid it down a bunch, you're down to 300,000. The other side of that is whatever that house is that you bought, you have a massive amount of equity in, presumably, because you've aggressively paid the balance down and it's appreciated pretty aggressively. So what we see a lot of people doing also is taking that big old chunk of money, and they're buying a $700,000, $800,000, $900,000 house, but they're putting $500,000, $600,000, $700,000 down, which, if you owe 300,000 at 2.3%, but you're able to sell your house such that you make enough money to put a decent portion down and you're financing less, or you're financing the same amount at a slightly higher rate, the payment shock isn't going to be nearly as much. So long-term, you might be paying more in interest, but you will never hear me say, marry the house, date the rate. The reality is, in my career, I have yet to see a customer take 30 years to pay off a mortgage. Right. You either sell the house or you refinance it at some point. So I think getting so hung up on the 6%, 7%, whatever it is it's important. It's just not that important.
So Candace said, and because you did the loan for both of these, she gave up a 2.8 for what the rates were.
Exactly.
Which was she has a very high rate.
Candace has one of, not throwing shade, just the luck of the timing. Candace has one of the highest rate loans we've ever had to do. And we're going to refi you out of that soon. I promise you this.
But she was, so I think the trick is somebody like Candace, and I hope she doesn't mind how openly we're talking about this, but Candace had a ton of equity in her house because she bought it at a good time and she got a, pretty good deal on that house, thanks to us. The trick, I think the hard part is the person that bought when prices were higher. It's one thing if you had the house for 5 years and you've got a ton of equity, like you just said, and to jump up a little bit. Again, it's just, I guess it really comes down to how bad do you want to move? I mean, there's nothing. Look, this is a very black and white scenario where if you have a 2.4% interest rate and your payment's low and you don't want the next step up house or next whatever house, if the amount of X money extra you have to pay is not worth it, then you just don't buy it. You know what I mean? I think that's, I think you answered you gave a very eloquent answer. And I think the shorter, answer to that is you have to look at this. It's like the Libra scale.
You got to look at the whole scenario, not just the interest rate or the payment or whatever.
my car costs X, and if I want to go buy the next car up, do I want to pay twice as much or whatever? How bad do you want the car? How bad do you want the house? How bad do you want the boat? I think it becomes. I think you explained it well in the sense of, don't stay in a house in a location or a size or something that doesn't suit your family just because you've got this low interest rate. Look, and I don't know if you're seeing people do this, but I think it's a little tough because I think we have a ceiling on what you can rent houses for here. But are you seeing people keeping those houses and short-term renting them, long-term renting them, or are they usually just selling them?
That was a real big trend for a year or two, 2022, 2023. Everybody, oh yeah, we're going to keep this house and rent it because you can't buy anything right now. We're going to make so much money renting. And I think what a lot of people realize is that being a landlord kind of sucks.
It does. I've done it.
Sucks. For every person that says, oh, it's great, I make all this money, you could probably find 5 or 10 that are like, oh my God, don't do it. So I think that that's kind of where we're at now is, there's still people that are like, oh yeah, that's my plan. But I think when you look at the equity gains that you're able to get from selling some house that you've owned, a few years or whatever, I think that that's a really tough one to outweigh. And using Candace as an example, I don't recall 100%, but I'm fairly certain the house that you sold, we still had mortgage insurance on, and we were able to put more than enough to not have mortgage insurance on the house that you ended up buying, right? So like,
probably
you timed it awesome. So it sucks that the rate was higher, but to your point, you got this beautiful home that you love, and it worked. So I think it's all about setting your goals and listing out your priorities, which, to bring it back to the very first thing we talked about, speak with an experienced lender, talk with an experienced realtor, and really figure out what your goals are and what you're trying to accomplish. Because, I guess the first question I ask anybody, whether it's a $100,000 purchase, in fact, so, I do MISHDA, which is a mortgage program for low to moderate income buyers where you get down payment assistance and all of that. Worked with a customer today that around $75,000 using a MISHDA loan. Same day today, worked with a customer for an $800,000 home, right? So we have a wide range.
That's Northern Michigan.
Yeah, right. But it's like you have to be able to service that if you're going to be an effective loan officer, realtor, whatever in our market. But both of those people, the first question I ask them is the exact same. Do you have a certain monthly payment that you're trying to stick to, or a certain amount of money that you want to put into the transaction? Right. Because one of those is going to determine so much about what direction we go with it. And if I don't ask those questions, I'm not doing a good job because I don't know how to help you reach your goal.
Give a quick rundown. We're coming up on an hour. Are you okay in time?
Yeah.
Okay. What's a rundown of down payment, type of loans, type of loan products, just for anybody that's watching that's not familiar? Not everybody knows the conventional 20% down. What else do you have?
Yep. So Northern Michigan is awesome for many reasons, but from a mortgage standpoint, one of the things I learned when I came from Southeast Michigan, where this isn't the case, and many of the buyers that we work with didn't even know that this product existed, but we're afforded a couple of extra opportunities because of our rural nature of our market. So conventional loan, Fannie Mae, Freddie Mac, everybody has that. If you're a first-time buyer, 3% down. If you've already owned a home, minimum of 5% down. If you don't want to have to pay mortgage insurance, you put 20% down. Mm-hmm. FHA loan, it's a government-backed loan. Used to be like, oh, you've got bad credit, you get FHA. Not at all the case now. FHA fits a wide range of customers or buyer profiles. Generally speaking, since it's a direct government type loan or a government insured loan, pricing is a little bit better. So like right now we're seeing almost a 0.5% improvement for customers that choose an FHA loan over a conventional loan. So the downside is you have to pay FHA's version of mortgage insurance, but depending on your credit score, that might be a lot cheaper than the conventional mortgage insurance. So it's good to have, both of those offerings. The product that a lot of people don't realize is available is what's called USDA or rural development.
RD.
All of Northern Michigan is rural. Even if you're in Petoskey, you can be in downtown Traverse City, Charlevoix, doesn't matter. It's a rural market.
Sure.
The reason why rural development is so cool is because it's similar to FHA in that it's a federally insured loan, but it's broken all the way down to the state level. So there's different rural development offices, like we have them in Traverse City and Manistee and, around Northern Michigan where they actually underwrite them locally. Rural development, the product is great. It's 100% financing, so no down payment. which is great. It has income limits, but the income limits are pretty reasonable. Like using broad numbers, because this isn't a sales pitch. I haven't given my license information or any of that, but say USDA income limits, 110 to 140,000, depending on the size of your family and the county you're buying in. So that's a pretty good living. Yeah. And there's no maximum loan limit. So the downside is, since it's a no down payment loan, it's a little bit more restrictive on debt to income ratio, or I should say more conservative. So rural development is a product that it has helped us a number of times where it's like, man, these numbers are just so tight to get this customer to work. Wait, let's look at RD, because the mortgage insurance is half of an FHA loan. It doesn't have a down payment requirement, but you can make a down payment if you want to. It just opens up a lot of opportunity. So that's a great option that we use quite a lot. Another one that I mentioned a minute ago was MSHDA. My team actually is the largest MSHDA lender in Northern Michigan for the last couple of years. Cool. MSHDA is the Michigan State Housing Development Authority. And basically what that is it's a state bond program where the state of Michigan will say, we're going to subsidize however many $1 billion in mortgages for first-time home buyers. Here's the thing. Because Northern Michigan is rural, you don't have to be a first-time home buyer. It's what's called a targeted market, the whole area. So as long as you're buying in Northern Michigan, if you fall into the similar to to RD, a little bit lower, maybe $105,000 or so, depending on the county, you might qualify for a MSHDA loan. The cool thing about MSHDA, this is actually a really good hack for, we see it a lot on fixed income people. So retired person qualifying for a mortgage wants a low rate. MSHDA right now, if you're not doing their down payment assistance, you can get a 6% interest rate, 30-year fixed conventional, no mortgage insurance if you're putting 20% down. And the income limit's like I said, like $105,000 or $110,000, depending on where you're looking. So if you're a retired person and you're like, we're downsizing from our $1 million house to a $500,000 house, we have no debt, we just, we want to borrow whatever, $300,000 to get this house. Even though MSHDA is like a first-time buyer or whatever program, because the interest rate is subsidized by the state and it's based on income limits, it's an amazing option for people that fit into it. And a lot of lenders are scared of it because it's the unknown. So, we absolutely love MSHDA. It's a fantastic product. From a jumbo standpoint, jumbo is anything over the conforming loan limit, which for 2025 is just over $800,000. So
still a pretty high price.
It's pretty wild. So when, Gino and I met in college, and when we met, the conforming loan limit was $417,000, and it was $417,000 from when you and I were 20 years old until you and I were 35 years old. And in the last 6 years or 7 years, maybe 8, 9, I don't know, the last bunch of years, it has more than doubled. It's gone crazy. So you can get a conventional loan for quite a lot. So if you're putting 20% down, you could, in theory, buy $1 million house 20% down and still have a conventional loan, which is traditionally unheard of.
How do they determine the conforming limits?
I'm sorry?
How do they determine the limits?
It's a process. So essentially the government, the FHFA, has a calculation. It's based on average median home sales prices nationally, and then they break down to MSAs. It's really complex, but basically every single year, a few lenders, my company included, will have kind of figured out what that formula is. They don't publish it. And we manually guess it and get really close, right? So like we release conforming loan limit updates in, late 2024 for 2025, which is, it's a nice perk, but it's basically because we saw such crazy rapid appreciation over the last few years. So too, tax values go up, home values go up, loan limits go up. It's the way of the world.
It feels like the right number. I think back when we were 20, 400 was jumbo. It's crazy to think how much.
Right.
The house that was 400 back then is probably a 900 or $1 million now. So
easily. And then beyond that, I was going to say beyond that, there's like jumbo and super jumbo. So there's products.
Super jumbo. I didn't even know that.
Yeah. So for every company, because jumbo is just the company lending you their money. It's not insured by the government or something like that, right? So like for us, we call super jumbo anything over 2 million, and we'll go. Wow. The last I saw, I think it will go up to 4 or 5 million.
Is that right? Wow.
Yeah, never been lucky enough to do one, but
this is our year.
Yeah, we'll find one.
It seems like every deal we've ever done in that stratosphere is cash, almost always.
Yeah, I that product is interesting. We saw, I would say, between 2020 and 2023, my group, And again, in that period, I think we closed, off the top of my head, probably close to 1,000 loans. We might have had 5 jumbo loans, right? Like it was just people in that area or in that range were paying cash. In the last year, we've easily doubled that.
Yeah, I'm sure. That's almost, look, there's some houses for 800,000 that in some communities are entry level here or there.
Yeah. Well, and the thing too is that for quite some time, rates were so low, you could borrow money and you're like, well, okay, if I'm getting no return on having this $1 million in my savings account,
let's use it.
Why don't I just buy this house? Because the house is going to appreciate 6, 8, 10% per year. And that's my return. Now that you're seeing higher yields on savings accounts, the stock market, has been on a pretty solid rip for the last few years. Right. Investors that had traditionally been much more prone to use cash are like, I kind of want to leave my cash in play. Let's finance a little bit. And that's what we've seen, at least a slight return to that.
What about VA loans?
Oh yeah, dude. How did I not even touch on VA loans? My favorite.
I wasn't gonna let you not.
Yeah, right. So VA loan is one of my absolute favorite products. So right after I first opened our office several years ago, I love doing VA loans. Just living in Traverse City, there's a Coast Guard base right here, right? And for whatever reason, like my neighborhood is like the Coast Guard pilot epicenter of Traverse City. There's like all of them live here. So naturally, I have a lot of friends that are Coast Guard pilots. They're fun guys too to hang out with. If you ever get a chance to hang out with a pilot, do it. But you work with people you like, right? So I've gotten pretty good at the VA product because I do a fair number of them. And what I learned is that just like Mishta and just like some of the more complex products, VA is not complex. It's just a little bit different. And it takes some training. It takes some experience. So right when we were getting really ramped up in our office, I actually hired independent, like outside company to come in and train my entire team. Like we spent 3 days doing this VA training where we went as deep as you can imagine, right? Like every resource, every product, whatever. So from a VA standpoint, VA is a fantastic product. My belief is if you've fought for our country, or if you've dedicated your life to our country, which enlisting in the military 1000% is
what you've done.
Well, I owe you all the gratitude in the world because I have the greatest freedoms and I enjoy them. So I want to be good and be able to serve you as good as you served our country. VA is fantastic. If you're a veteran, no down payment, no mortgage insurance. It's a federally backed loan and there's no maximum loan limit. So essentially you could buy $1 million house and do 100% financing, which is cool for the veteran. We see a lot of veterans still put money down though, because they're trying to reach their payment goal or whatever. Another benefit with VA loans is that for the veteran, if you are receiving any sort of disability, so service-related disability, VA has what they call a funding fee. They waive it. So they have it's like their administrative fee, but it can be anywhere from 1.75% to 3.3%. If you're buying a $500,000 house and you have a 3.5 or 3.3% funding fee, that's like $16,000. That's a massive amount of money you have to pay the VA. So, in fact, we've got customers where they're like, "Wait, I have this funding fee." Like, yeah, but here's how we can, you can work with the VA to get around it, that kind of stuff. So, VA is a very nuanced product, but like I said, one of my favorites. It's fantastic rates too.
We've been on for an hour and just about 10 minutes, so I don't want to keep you too long. Any parting comments to the audience that you'd like to share before I let you go for the evening?
I should have really thought about this ahead of time, but no, just my entire outlook on everything is a rising tide lifts all boats, right? So happy to help. I appreciate your partnership and your friendship. Sure. As you said, the market is tough right now. If you're a buyer, it's tough. If you're a seller, it's tough. If you're a realtor, it's tough. If you're a lender, it's tough. Absolutely. And if I'm going to go through it, I couldn't pick a better person to partner up with. And I think that our customers feel that too, right? Like I tell everyone I work with, like once we talk on the phone, we're buddies. So right. If you can, you guys got the filtered me tonight. If you can handle the full me,
we're going to charge a subscription fee for the audience to hear the unfiltered version.
Yeah, right. But it's you find people you like and you get through it and you do the best you can. And what we see is the customer feedback is really good. So people get so built up or so nervous. The real estate market is really hard right now. I'm going to wait. Don't wait. Just find the right team to help you get through it, because you can make it.
To buy houses when you're ready. You can't time the market. You're not going to. Your odds are you're not going to get the stock market, the real estate market. You're not going to get it right.
Yeah.
How can people follow you? How can people find you?
I am on Facebook. You can look up One Trust NMI. My name, just Ian Ashton on Facebook, and yeah, those are probably the two best ways. My cell phone, 586-214-9858.
I'm going to put your phone number right out in this.
IanAshton.com is my website. That's probably the easiest way to find me.
IanAshton.com. I want to make a banner really quick.
There you go. All right. How do I ship this? I'm going to ship this from Mexico to Candace.
There you go. So, all right. Thanks everyone, as always, for watching. These are one of my favorite nights of the week. I love doing these. We've had some really good guests lately. And thank you, Ian. We couldn't do it.
Thank you.
And we will talk to you soon.
Thanks again.
See ya.